All right, my lovelies. I've been waiting for this video all day long. Honestly, couldn't wait to be here together again at last. I want to talk about a few things today. I want to talk about market volatility, what we're seeing, because today was one of those crazy volatile days. And this is the norm. And I've been talking about this a lot, but I want to shed a little more light onto what it actually means and what's driving it. I think this has a lot of people, especially on the COD. I mean, the COD themselves seem to be oblivious as to what is going on here in these markets. And we're going to talk about that too. So this is my lovely post-market wrap-up for this Thursday, November 15th, 2018. So what happened? Let's start off here with the basics. Stocks finished higher today across the board. The Dow Jones Industrial Average put on 208 points. Let's cover a few more basic things here. The bond market, huge. This morning, when I did my market report, I explained to you that the 10-year yield was 3.08. Throughout the day, this did creep higher to a 3.109 last time I just looked at it. Despite that, again, stocks finished higher. This is bullish. This is bullish. I don't care how you want to look at it or cut it or slice it. That's the truth. I know all of you, or a lot of you, think I am being overly bullish. But again, I explained this to you earlier. I don't care. Doesn't matter to me. Pullbacks don't matter. Corrections don't matter at all. Zero. I just want to be on the right side of the trade. And as you all know, I am. How can I prove this? Go to my website, look at the positions I've had up there for weeks. So you know exactly what I'm talking about here. Gold and silver did put on some gains today. Silver like 1%, gold not so much. Remember, silver is volatile. Okay, we're going to talk more about volatility, like I said, just covering the basics here. Cryptocurrencies again under some pressure. Now, let's talk about volatility. I personally hate this word. The COD throws around this word like, I don't know, like it's whatever. They don't define it. They just talk about volatility. For example, so let's say stocks all of a sudden drop. They don't say, oh, you know what? Stocks just dropped. They'll say, oh, there's volatility in the market. They spin it without really defining volatility or what's driving it. So that's what I'm going to talk about right now. Isn't this just lovely? Okay. This is how I define a volatility. When you have an index, let's look at the Dow Jones Industrial Average, which makes a greater than a 1% move lower, followed by becoming flat, and another greater than a 1% move higher. That's volatility to me. So again, when you hear the COD try to talk about volatility, I don't know what they're talking about, because they don't know what they're talking about. It's rather significant moves, again, greater than 1% with regard to an index in one day. 1% or greater higher off the flat, 1% or more lower off the flat line. So that it's pretty straightforward, okay? Now, being that we have that out of the way, what's driving it? I mean, I would be willing to bet a lot of you out here are already well aware of it, but let's clarify what's going on. This is being driven not by guys like Greg Mannarino or by any of you out here that are trading this market, analyzing charts and trying to make sense of it. This is algorithms. This is algorithmic trading. How many of you out here, let me see a show of hands. Get your hand up. All of a sudden, you're watching stocks drop. All of a sudden, bam, you see stocks just, reverse in the blink of an eyeball. It happens all the time. Well, anyone find that somewhat suspicious? Well, it is and it isn't. Meaning this, when you see a lot of buying going on, can this have a nefarious element to it? Oh, absolutely. And it does, because the Federal Reserve has their own trading desk. You all know that. But do you think they have some guy like me sitting at a trading desk saying, okay, I'm going to buy right now. Oh, I'm going to buy this right now? Absolutely not. It's algorithmic. It's computers. That's what's going on. And they're all triggering at the same time. And that's why we're getting these crazy volatility spikes and drops in the market. Now, let me correct myself a little bit here. Okay, let's say this. Prior to the meltdown 2008, yes, we had volatility like we're seeing now. Maybe I'm over-exaggerating a little bit. Okay, it's possible that, I've been saying that this is kind of the norm. Well, it is and it isn't, okay? If you were to look back on, let's say, a chart prior to 2008, yes, you will see volatility like this, but maybe not to the degree or the sharpness that we're seeing now. And that is, again, being driven by computer algorithms that are making huge blocks of trades at the same time. You understand? Very simple. So in a way, yes, volatility is back. This is the norm. But maybe the sharpness of the moves is a little more pronounced today because of, again, we're talking about 10 years ago. So there's a lot more algorithmic, say that word 3 times fast, trading going on today. So this is the new freaking norm. You got it? Like a robot, how you do that robot thing? So that's what we have to understand here, people. And I think it's getting a lot of people confused, honestly, because it's not explained. No one talks about it, and I'm probably guilty of this as myself. And I'll talk about volatility, but now we know what we're talking about. You and I now, we're on the same page. So, and ignore the COD, okay? When the COD talks about volatility, they just don't want to talk about how stocks may be selling off. Because that's what they do. They just, anytime stocks drop, they call it volatility. They don't explain to you what they're talking about. They can't say, stocks are dropping right now. They have to say it's volatility. But now you know what volatility is. And, more importantly, you know what's driving it. These sharp moves like today. And this is why I've been explaining to you that it's very difficult, in my opinion, and I am certain there are smarter people out here amongst you than I am that can, I guess, weave out of this market using a straight up call or a straight up put. I can't do it. Maybe I'm just too damn old anymore. I used to do it. This is what I did for a very long time, but I'm telling you, it took years off of my life. There's no doubt about it. The stress level is pretty high. And you got to sit here constantly in front of your computer screen. Me, trading credit spreads now, yeah, I'm in front of this lovely screen in this lovely room all day long. It's kind of pathetic, isn't it? But I can actually leave. I can go have a sandwich. I could go, outside and go play with my dog for a minute or two. This is the truth. This is why I have adopted, and this is all I do now. You know that. Exclusively, I trade credit spreads. That's what I will be doing or planning on doing for as far as the eye can see for the foreseeable future with all this going on, because I do believe that it's the new norm. And we need to get used to this. So don't panic and whatever it is, because I really believe the market is trying to find a bottom here. I think yesterday when we had that panic selling with a huge move of cash into the bond market, that was a big tell, in my opinion, that stocks, the worst may be behind us here. Now, I'm not saying this is written in stone. I'm just, look, when I come out here and I throw this stuff out, first of all, as you know, I don't rehearse any of it. I literally sit here, whatever thoughts pop into my head, maybe one pops in over here and then it makes its way out of my mouth. That's just the way it is. So I'm just telling you the way I see it. Right or wrong, that's what I do. I don't sugarcoat a damn thing. You all know that. I just say what's on my mind at that moment here, and that's it. So with that said, I hope you understand the real meaning of volatility, not the COD meaning. The COD meaning, you know what I mean? Ignore them, because they should be ignoring themselves. You all know that. It's an incredible situation. Oh yeah, it's volatility. Don't worry about it. They don't define it. They don't tell you what's driving this whole thing. You know, it's not a guy like me sitting here, or a guy or a girl like you doing it. This is institutional trading being done by algorithms, block trades, all at the same time, and that's why we're getting these sharp moves. So, with that said, my lovely friends, I'm going to let you all go. We will resume the festivities tomorrow. I'm excited. You should be excited too. Again, I have 7 credit spreads expiring tomorrow, and unless the bubble pops tomorrow, all 7 of them, I will be keeping 100 lovely % of the premium. That makes me happy. This is my happy face. What do you think? I got to work on it. I'll see you in the morning. Bye.